Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. Let's get started. The title of the video is Trading Dow Jones Index Tips and Tricks. All right. How do we know that a financial instrument is bullish? All right. And how do we know that a financial instrument is bearish? All right. There are two ways one can attest that a financial instrument is bullish. All right. So the first one is that when a financial instrument is displaying a higher high, we know that it's bullish. All right, it must display higher high and higher lows. So we know, technically speaking, that the financial instrument is bullish. Now, how do we know that the financial instrument is bearish? Technically speaking, the financial instrument must display lower lows and lower high. On most of the time frame, you will see it on a 5-minute, hourly chart, daily chart, weekly chart, monthly chart, and a yearly chart. All right. So if a financial instrument is displaying higher high and higher low, and suddenly we see that for the first time the financial instrument has displayed a lower low, it's giving us a warning that the bullish momentum is not sustainable. So we can quickly check the economy news, check the fundamentals, and see why, for the first time, the financial instrument, has failed to display a new, higher low. All right. Or if the financial instrument displaying higher lows, higher high, and suddenly display a lower high, we can start verifying, go to Google Finance, check Forex Factory, check the economy news, or we may decide to take profit, we may decide to manage our trade and become more defensive, all right? On the other hand, if a financial instrument is displaying lower lows, lower high, and suddenly display a higher high, in a downtrend, we start wondering what's going on. It's telling us straight away that the bearish momentum is diminishing. So we have to now verify why the price suddenly went back above the previous lower high if it was going down before. All right. This is about technical verification to know that whether a financial instrument is going up or is going down. Remember what I said to you, there are two ways we can verify whether a financial instrument is bullish or bearish. The second approach. So once we see that the financial instrument, technically speaking, is bullish. If we verify that it's technically bullish, displaying high lows, high, the next verification is the fundamentals. You remember, if you want to drive from A to B, all right, you must have petrol in your car. You must have a fuel in your car, all right. So if you don't have enough fuel, the financial, the movement, you may go for a while, but you will stop somewhere, all right? So technically speaking, we know that if the financial instrument is bullish, we want to know whether we have enough fuel, enough petrol to bring us to our final destination. So that's where we go to Google Finance. We'll perform Google Asset test. We'll check the economy news. We'll check the fundamental. We'll compare the current asset to the current liability. The reason why we do that, that's what we call as Google Asset test, is that if a company cannot pay their short-term debt, they are under pressure. All right, end of the month, end of the quarter, you have to pay your bills. All right, but you are not able to pay it. You are under pressure. All right, so that's why we call the Google Finance Asset test. There are other verifications that we can do for long-term verification to know whether a company is viable or not. We can also check the competition. Are they coping with the competition, or will they crash under the competition? All right. Suppose you are ordinary small business, you are competing against Coca-Cola. Well, if you are competing with Coca-Cola, you have to have a strong balance sheet. All right, enough money, to advertise your business like Coca-Cola. So we want to know whether they are coping with the competition. Are they gaining more market share? We can check also the management, all right? So some business may be struggling for a while just because they have a useless management in place. Or a crazy manager came into the business and changed the policy and the business going down. One example that we see recently is about Tesco in London, and the business is struggling. We know that this is mainly due to the management, all right? So apart from the technical verification to know whether a financial instrument is bullish or bearish, we have to check the fundamentals. There are two ways: the technical verification, higher lows, higher high, fundamental verification at Google Finance or Forex Factory, checking the economy news and the fundamentals. The same thing we do when we see that a financial instrument is technically bearish. We must now confirm that with the fundamental analysis. My approach to traders, the old way of trading, when a trader will place a trade just based on the technical alone or ignoring completely the economy news, those days have gone completely. I do not recommend to traders to use the technical alone, all right? Combine the technical analysis and the fundamentals. Enough of my blah, 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 trading Dow Jones Index tips and tricks. So why am I saying all this? At the beginning of the year 2014, as I posted a video at goo.gl channel, and I said to traders that as long as the Dow Jones remain below the high of 2013, it's bearish. Why? Because if it's bullish, it must display higher, higher high and higher lows. So if it remains below the high of 2013, it's bearish. Finally, you see it went below it, but finally it went above it. Now, technically speaking, it's bullish on the yearly chart because it has displayed, it went above the high of 2013. Now, another thing I need to say to traders is that when you are trading Dow Jones or the S&P 500 or any major index, you need to adopt the mindset of professional traders. Otherwise, you are going round. Professional, you are competing with the best professionals that are trading these indices. You cannot fool them, all right? So it's very important that you do not violate the market principle, and also that you combine the technical and the fundamentals. Very, very important if you are trading, especially blue chip stocks, all right, stocks that are listed on the major indices like FTSE 100, Nikkei 225, Dow 30, NASDAQ 100, whichever country you are in, the major indices, the stocks that are listed on those indices, you must trade them like professional traders. All right. So we see that the high of 2013 was at 16588, 16588 for the Dow Jones. And it went above that level. You can see at the beginning of the year, it went below it for the resistance, which was bearish, and finally found the support near the median line of 2013. Where I place my cursor now, and then from there, it found the support and went back above the high of 2013. It is bullish, all right? So very often, if the price fails to find to go above the high, it will try to go back down to look for a better support, which is the median line on that time frame, the median line of the last candle on that time frame. This is about trading idea part 1, part 2, part 3. All right, if you are TSTWS008 trader or TSTW24 trader. So it's bullish now. Technically speaking. Now you want to check the global economy. Recently, the Federal Reserve has said that they have stopped printing the dollar because when they were printing the dollar, there was outflow of capital into the stock market. Now they say, we have finished printing the dollar. We are not going to print the dollar anymore. The economy is strong. Good. Now, the tendency is that a lot of aggressive traders think that, the market will go down straight away. Now, in my view, that's my personal view, all right? Feel free to disagree with me, all right? In my view, the market will not go down yet. Why? Because this is about a cycle, market cycle. In my view, we will start becoming a little bit bearish, around July 2015. But in 2016, the market is likely to go down. But from July 2015, we will start, monitoring the market carefully so we don't get caught up like it happened for a lot of hedge funds in 2008. That's my personal view. But as always, as I told you, the market will not go down based on technical alone. But, okay, the fundamental are the fuel, the fundamentals are the fuel that are propelling the market, okay? So if the economy is recovering very well, okay, you just continue to go up. Another thing I want you to understand here on this talking about technical trading for the Dow Jones, you can see here the price went up, talking about ABCD chart pattern, and then it formed a double bottom in this session here. There is a long-term target for the Dow Jones. So we will say A, D, C. So we will project this distance from here to here, okay? We project it to the upside here. It will bring us too far away up on chart territory. I can calculate it, but I don't want to go into that session. So remember that ABCD, that's the greediest target, talking about the long-term, okay, target in the far future for the Dow Jones. But what's happening now? There is one ultimate target that I want traders to note down. So don't forget it if you want to trade the Dow Jones. The ultimate target for Dow Jones that we are watching up to 2015, talking about 2016, the target is 191,157. 191,157. That's the ultimate target. Apart from that target, there is another medium-term target, which is at 17354. The level of a 17354 is already broken. Okay, it's now the price at 17573. So it went above the 17354. This is the medium-term target. It went above it. So the ultimate target that we are watching now is at 191,157. Professionals know that. How do we calculate that? You see that the price consolidates a little bit here on this yearly chart, and I draw two horizontal lines. I'm going to color them into orange so you can get exactly what I'm talking about here. All right. So I use a conservative measurement always. I can draw my orange line all the way up here, but I don't want to. I want to use a conservative measurement. That's why I use only this session, the two orange line here. I can push it up here. Some trader will do that, but I don't want to do that. So with this consolidation, if the price goes above a channel, trader that understand what we call market geometry will know exactly what I'm going to do. We'll project the channel to the other side, okay, equal measurement, and we'll project it up. Okay, that's it. All right, so that's the first target. That target is already hit. That's the first target here, 15551. You see here, 15551. So by projecting the orange target, it brings us here. So the first projection brings us to the level of 15551. Because the price went above, okay, the 15551, the next target is the ultimate target that we are watching now, which is at 191,157. Do not forget it. Look, okay, this year, how the price came to retest the top of that first projection, the orange line, 15151. You see how it came back? Beginning of the year, the price pulled back to retest the top of that channel, which was the first target this year. Now it retests it, and then it starts going up. So the next target is at 191,157. Professionals know it, and you want to know it also. The short-term equilibrium price level for that we must watch in this, okay, talking about up to the end of this year, is at 16751. It's a level that is quite close, okay. 167, okay, 51. That's the short-term equilibrium price level. You see, that's the pink line here near the high of 2013, 16751. Note it down. The short-term equilibrium price level is very important for traders. This level will remain in place for the next, okay, 2 to 3 weeks. Okay, so keep watch. Remember that level, okay, because it's going up now. Watch it. In case we see some bearish blah 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 blah, that level, the price will like to retest the short-term equilibrium price level. Does not mean that the price will definitely come back and retest it, but we want to know where is the short-term equilibrium price level. It's at 16751. We must watch that level, okay, for the next 2 weeks, okay, maximum sometime 3 weeks, okay. So do not forget that level, okay. Professional trade around key level, ordinary trader trade technical indicators. Yes, you want to use technical indicators, use them around key level. take the signals around key levels and do not violate the market pattern. Talking about the market pattern, I'm going to go now to the weekly charts. We are talking about trading Dow Jones Index tips and tricks. On the weekly chart, we have a channel. Okay, how do I draw my channel? I want to show you now. I join this point and this point. You can see that I didn't go to this low here. I prefer the red candle here, this one. That's why I use. So trader know that when I'm drawing my trailer, I prefer the low, but I don't want to use this low here. I want to use see this bearish candle because the price was pulling back here. I use this one instead. All right. That's how I draw my first trend line, the blue line here. Then I will just use a 1 point. So what I'm going to do very fast, because I don't want my video to be over 20 minutes. I need to go a little bit faster now. All right. So I just need 1 point at the top. That's the third point here. And I draw a line that is parallel to my first blue line. So I have a channel. So on this weekly chart, you can see that the price is in a rising channel. Yes or no? Okay. Now we must also draw the median line of that channel because the price is going a little bit too fast. You see here? You see the median line? Okay, let's call it a median line, okay, into green. That's the median line of the blue channel. So you can see that the price is going a little bit too fast now. You see here, it was hanging along the median line because if the price is in a rising channel, we want to pull back. You see here, these are the stations. Pull back to station, display higher high, and then pull back, okay? But now if you're going too fast, it will stay above the median line. So we are now on the edge of the median line. For next week, ladies and gentlemen, if you are day trading, I want you to remember a level here. Okay, call it 173.08. Remember that level, 173.08. 173.08. All right, remember that level. In case the price pull back, watch it. Another thing trader will do is trading idea, okay, part 1. We draw the high, the low, and the median line of this weekly candle here. So draw it. I'm not going to do it here. The high, the low, and the median line of this weekly candle, the last weekly candle. Watch those levels. But do not forget the level of 173.08 because the price, the median line. So if you want to buy, we can draw another line here because the price is going a little bit too fast now. We can draw another line, professional trading alone. So you see here how I draw this one here, along the weekly chart, along like this. Price coming near that, okay, trend line here, this one that I draw now. Watch that level. So, okay, so I can put it here, the level of 176.75. If you are trading next week, 176.75. Will he find a resistance there? Because see here on the edge, you was finding a resistance there. So you want to remember that level also. But the ultimate resistance also, you see the trend line here, we can extend it. So draw it as I did it on my weekly chart and extend the top of the channel to the upper side. So if you are looking for a sell signal for short term, you want to trade it, you want to take sell signal on the edge of this blue line that I draw here, or on the edge of this top blue line here, which is the top of our channel. So extend it. Right now I cannot extend it because I don't have enough room to do it. So this is how we want traders to trade, okay, the Dow Jones Index. The price is always going from A to B, all right? And using market geometry, we can, anticipate where the price is likely to change direction or find a support or resistance. This is what we are doing now. It's about technical analysis. We must also pay attention to the economy news. So I'm talking about the Dow Jones, which represents 30 stocks. We must also know the market leaders for the Dow Jones. Go to www.dayprotrader.com, click on Market Watch, and you will see a page there where I talk about the market leaders of the Dow 30. The market leaders control the index itself. So if the market leaders are going down, the index is likely to go down. We know that the FTSE 100 is controlled by the financials, okay, the banks. So when the banks are going down, the FTSE 100 usually have a bad time. The same thing, we have a market leaders for the Dow Jones. This is the end of this video. I hope you have learned something from it, and we put it into use to make excellent decisions. Remember, we want to use the trading drill, the setup, the signal, and the low risk entry point without violating, okay, the trading drill or any fundamentals. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.